guys, Louie here, and Merry Christmas from California on this rainy Christmas day. Just out here in the backyard, staying out of the drizzle. It's in the 50s, I believe, and I do think we're gonna have some colder weather ahead. I was looking at this beautiful redwood tree. I don't know how old that is, but it's at least 3 times taller than the house. And makes me think about our goals and how our goals are really for the long term. You know, they're not for the short term. And I'm going to do a little video right now to highlight how people make their moves. And, you know, if fear of missing out is why you're acting, you may be making the wrong move at the wrong time. A contrarian point of view, you know, taken in the right measures, can really be helpful to grow over time into something huge. But you got to start out making the right moves. So let's go take a look, and again, Merry Christmas. All right, here we are. We're on coinnews.net, and as of December 9th, a couple weeks ago, they had this article about Perth Mint November gold bullion sales, highest in a year. All right, and the Mint's gold sales were the highest in a year, while its silver sales finished above 1 million ounces for the 4th month in a row. This is in Australia, and so demand for Australian bullion products was mixed in October. We're going back through the articles. Then they say Perth bullion sales surge in September to a 3.5-year high. But going back a little before that, they jumped in August. But if we go back to, let's see, mostly steady in the first half of 2019. And then we go back to June 27th, Perth Mint gold bullion sales in May drop to a 25-month low. So the question here, we're going to look at the trends in the Australian market and see who made the better choice. Someone who was purchasing when the sales were low and demand was off, or someone who was jumping in when things were catching on fire. And I want to show you the chart here real quickly. Hold on. All right, here we are with gold in Australian dollars. We've got the year of 2019. And as we can see in the Australian dollar, right around May, we were at 1,800 Australian dollars. And by August, we had popped up to a high of 2,300. So what is that, about a 20% plus increase over this period of time? So as the price was rising, people were buying more and more. But when it was languishing, you know, the news was demand is off, 25-month low, etc. So I'm going to show you another chart here in a minute. But clearly the people that were buying when the news was negative or neutral had a much better entry point than those that waited for the blow-off, right? And we're going to look at the currency exchange rate as well, because that had something to do with this. Hold on. All right, now I've showed you these charts before from Kitco, and what we have in the red line is gold in US dollars, hitting about 1,500 the other day. That made for a nice Christmas present. The red line is US dollars, and the blue line is various world currencies, the price of gold in their currency, taking into account currency exchange rates. I happen to be on the British pound at the moment, but you may recall a video from a couple weeks ago where I said that when the blue line crosses under the red line, you have an opportunity to pick up your gold, not only if the price of gold is down a little bit, but also if the other country's currency is strong, that will push the price down even further. I think I indicated 1,100 pounds was a good entry point with this big a divergence in the UK. And look what's happened here. The price of gold going up and their currency weakening back a little bit has now pushed it up to 1150. So what is that, maybe 3% or so in a couple of weeks. But I do think this is a valuable tool to watch when both currency exchange rates are in your favor, as well as hopefully a price that you can live with. So that was the UK, and that turned out to be true. Let's take a look at the Australian dollar, which is what we're trying to do here about when people were entering. So I think what you'll see here is the blue line. We get the dates in here. The blue line, which takes into account the currency fluctuation, was below the red line, at least in April, upwards of May. Right around May, we had a crossover, and this is when the breakout occurred. So if you were watching this, you may have decided to get in, even though the news was fairly negative about bullion demand in Australia. And certainly when that blue line crossed over, we saw both an explosion of gold prices and an explosion of the cost of that gold in Australian dollars as their currency weakened. This would be the the exact wrong time to purchase. But if you were reading the articles, you would see that people were buying gold off the shelves, because it was going up. But in this scenario here, once we had crossed over, there was a strong likelihood that we could have a pullback. And sure enough, when that divergence became really extreme at around nearly 2,300 Australian dollars, we had a pullback, not only in the price of gold, which, happens despite currency fluctuations, but this was the perfect storm to really show that your entry point was the wrong entry point. Because if you bought at 2,300 Australian and now you're sitting at about 2,180, you've taken a pretty good hit right after you entered. So, I guess this video is to say, watch for a contrarian entry point. And, certainly take a look at your currency exchange rate if you're in Australia or another country when you do want to enter, if you think the move is about to happen or is in play. And if there is a large gap between your currency and the U.S. Currency, then be very, very cautious about being right in here. So right now we still have the blue line above the red line, but not by too much. So I don't think gold is going a lot lower here in the near future. That's just my opinion. I think it'd be okay to enter here, but this would be an example of this gap up here around September, where a fear of missing out was driving people into the bullion market. And of course, if you follow the Australian currency market, there was probably plenty of reasons why Australian citizens were trying to stock up on gold and silver. But I'm just pointing this out to talk about timing your entry point. And right now, of course, in US dollars, we have gold back at 1,500. I think we have definitely seen some buying here based on end of year. People, the end of the year can be a weak time for precious metals prices, and the beginning of the new year can be a strong time. And I think people are repositioning their portfolios, taking their gains, etc., or losses, and getting ready for the new year. So, that's the point of the video is, are you investing for the long term? Are you picking your entry points? Or are you just reacting to the news? And, for the last few weeks, with all the negative news out there and all the predictions of gloom and doom and languishing gold and silver prices off their high, actually has turned out to be a pretty good entry point. So you may want to think about acting contrarian to what you see in the news. All right, what are your thoughts on this? And do you like this tool here? If you're in other countries, we could take a quick look through where we stand. Brazil, still a blue line way above the red. Canada, blue line below the red. Excellent entry point, in my opinion, in Canada. China, Blue line above, not a good entry point. In the euro, blue line way above, not a good entry point. Sweden. India, blue line above the red. Yeah, I'm not sure that's a good entry point. Japanese yen, blue line was below. So look at that major gap right there. And then bam, right back up, back to parity. Mexican peso, great entry point in Mexico, I think. Russia, fantastic entry point down here. I guess the ruble is strong compared to the dollar. And look at that divergence. I mean, the last time we saw a divergence like that, we had, at least a 10% move in the price of gold in the Russian currency. South Africa, little divergence there for the positive, and the Swiss franc pretty much in parity. Could go either way. So there's the chart again. I'll put the link to this gold price chart in other currencies, and just look forward to your thoughts and what are you thinking about the price of gold right here around 1500 US. If we take the long run on this, we certainly are making a nice little flag here, and I wouldn't be surprised to see gold headed back up again, but we do not know. We just don't know. But like the redwood, if you're in it for the long term, look for your entry points, add what you can afford, diversify, don't put all your money into precious metals. I just have a strategy. That's what I suggest, or at least be aware of a strategy as you jump into these markets, especially if you're new. All right, guys, again, Merry Christmas. Hope you have a wonderful holiday season, and Santa brings you everything you want. See you on the next video. Bye.